So that's the story of Adani and Hindenburg, just one stock in a market of over 5,000 listed companies on India's Bombay Stock Exchange. Most investors know this already. One company's issues won't disrupt the entire market. In China, however, it is a very different story. Overseas investors are leaving China in large numbers. Between April and June, overseas firms pulled out $15 billion, $15 billion taken out from the Chinese economy. This is a record exit. But it's hardly surprising. In the past 3 years, Chinese stocks have steadily declined as foreign investors have pulled out their money. And how much was the loss? At least $6 trillion. The steady outflow shows that China is unable to reverse the decline and restore confidence among foreign investors. They seem to have given up. And why is that? Why are investors leaving China? Because they see risks, both short-term and long-term. In the short run, they are worried about the trade war between the EU and China. It is intensifying. Brussels has imposed high tariffs on Chinese EVs. It wants to restrict their imports. Made in China EVs now face up to 37% extra taxes in European nations, in EU nations, 37% extra tax. Beijing has filed a complaint against this at the WTO, the World Trade Organization. China has challenged the European tariffs. The complaint says that Europe's actions have no basis in law or fact. They're legally and factually incorrect. That's what China is saying. But here is the argument from Europe. It says, in China, EV makers get state subsidies. So it's not a level playing field because the government is helping car companies. It is helping EV makers. And this allows them to undercut their competitors. They dump cheap cars in European markets, and this hurts the local players. A few months ago, Brussels and Beijing tried to talk about this to settle their differences, but they could not. Last week, China moved the WTO. It filed a formal complaint. Now, for the investors in China, all of this is a risk, and they see this as just the beginning. Today, it's a trade war with Europe. Tomorrow, it could be China versus America. And they see it coming because both presidential contenders in the US are talking about this. Kamala Harris and Donald Trump, they say they want to contain China. Both Harris and Trump want to act on it. Harris wants to invest more in American manufacturing, and Trump proposes a much more hawkish approach.
So with all the other things happening on our border, and they're being built by China to make cars and to sell them into our country, no tax, no anything. Those plants are going to be built in the United States, and our people are going to man those plants. And if they don't agree with us, we'll put a tariff of approximately 100 to 200% on each car, and they will be unsellable in the United States.
Long story short, the divide between China and the West is widening. Foreign investors don't like it. They don't want to get caught in it. They don't want to get caught in the trade war between China and the West, so they're pulling out of China. That is one reason. The second reason is the Chinese economy itself. It is showing clear signs of stress. This year, China set a growth target of 5%, a target that it's missing. The latest numbers show growth at 4.7%. Exports are underperforming too. In July, China's exports grew by 7%. The target was closer to 10%. So the fundamentals are weak. And the even bigger worry is the local governments and their debt. It is like a ticking time bomb. We've told you about this in the past. Look at what local governments in China owe. Anywhere between $7 to $11 trillion, that is their debt. And out of this debt, 7 to 11 trillion, loans worth $800 billion are at the risk of default. A lot of these loans were taken to build infrastructure projects, stuff like your industrial districts and resorts and transit systems and housing projects. Many of these projects have failed. So the local governments are falling behind on their debt repayments. This has forced Chinese officials to resort to extreme measures, like chasing private sector companies. What for? To collect unpaid taxes. More than a dozen listed companies have got notices in China. Local governments are demanding millions of dollars in back taxes, retrospective taxes, meaning these bills are based on old transactions dating back several years. They come out of nowhere. It's like you sealed a deal, say 10 years back, and now the government is telling you that there's a tax on that deal that you must pay. Needless to say, it's unfair. But this is what's happening in China. One company has been asked to pay up to $12 million. Do you know when these taxes were due? 30 years back. But they must pay $12 million now. Another company has got a bill for $92 million for taxes that were due 20 years back. This is a clear case of tax terrorism. But these local governments are so desperate, they're running short of cash. So they're looking under every rock for money. This approach is not sustainable. The Chinese economy needs reforms. Even Chinese officials agree.
Pushing forward Chinese-style modernization faces many complex conflicts and problems, and we must overcome multiple difficulties and obstructions through further comprehensive deepening of reforms, promoting better alignment between production relations and productive forces, the superstructure and economic base, state governance, and social development. This will provide powerful momentum and institutional guarantees for China to achieve modernization.
China has made similar promises before, but it has failed to deliver. Foreign investors are catching on to this reality. They have lost faith in China, and about time, we say. If one company fails, the larger market can still sustain the stock. But if a government defaults on its debt, all bets are off. No wonder investors are leaving China.
Across continents, one powerful news source.
Bringing you diverse perspectives on the issues that matter.
We go beyond the boundaries to give you that little extra about every sporting moment.
So thank you for making Firstpost 5 million strong. We're counting on your support, and you can trust us to bring you the news unfiltered and unvarnished.
Climate change is on our doorstep. It's time for a revolution to take root. And it starts with 1.4 billion Indians. It starts with one tree for humanity, one tree for Mother Earth, one tree for a future. Project One Tree, a News 18 network initiative.
Obviously today, the T20 World Cup bandwagon has moved across to the West Indies more than we expected.